Good morning, traders. Good morning, traders. Today, the time has come to give you a clear explanation of the bearish Fibonacci butterfly pattern. So, though we are using the word butterfly, it has nothing to do with the insect butterfly, which is a beautiful insect. But we want to talk about trading the financial market with a specific Fibonacci pattern, all right? So that pattern has the shape of a butterfly, and it is called, a Fibonacci butterfly pattern. You may also hear some traders talking about a harmonic butterfly pattern. But my intention is to help you identify the pattern correctly and be able to trade it like a pro. This is what I do care about. So if you have been trading for some time and you have learned about the butterfly pattern, I would like to encourage you to watch the full length of this tutorial. So sometime I may start watching a video on YouTube, but because of the time restriction, I may pause the video and I'll come back and I'll finish the video. So you can do exactly the same thing. You can pause the video and then another time you continue to work. But I recommend that you watch the full length of this tutorial so you may understand everything that I'm about to say, because there are a lot of misunderstanding when it comes about how to identify the butterfly pattern and, most importantly, how to trade it like a pro. All right. So the first thing that I say to traders all the time, so if you have been following us before, you can close your ear for a second. All right. When we talk about a pattern, we are talking about location. Where does the pattern form? This is very, very important. So when we are talking about a bearish pattern or a bearish butterfly pattern, it will be formed at the end of an uptrend. This is critical. So if I draw on my chart, so we want to see first an uptrend. If there is no uptrend before, we cannot talk about a bearish pattern or a bearish butterfly pattern. It's just very simple. This is about the market pattern, all right? So you will see sometime traders post video on YouTube, and you will see that they say this is a bearish butterfly pattern on the hourly time frame or the 2-hour time frame. It's not exactly that. Maybe they are new, okay, which is okay, all right, but you want to follow the step correctly so you may identify the butterfly pattern like an expert. So you want to see first an up move, beautiful, gorgeous up move, all right? So after the up move, we want the price to escape, so to speak, okay, the bullish channel. So on my chart, you can see the green channel, and I'll represent the price with the blue arrow here. And after the bullish progression, we want the price to come out of the channel. That move out of the bullish channel, that's how we call XA. Letter X for X-ray, and letter A for alpha. Very, very important, all right? You can call it anything else that you want, but generally, if you look on YouTube, you will see they call it X-ray. That's what I'm calling us as S-ray. I may call it something else, but we call it S-A. X, that's the point where the price starts going out of the channel, and that's the point A for alpha, where the price has stopped, okay, going down. So we will color that into red. So some traders sometimes they think that, John, why are you drawing? Why don't you show us the butterfly pattern on the chart? Okay, that's a very good question. So I've done the same thing at 24 Aliaway YouTube channel. Traders say exactly the same thing, but later on they understand what we are trying to do, because this is what I will say before, all right? The experimentation, okay, the accumulation of the knowledge, all right, the practice, and the experience. So what we are doing here, we are trying to explain the butterfly pattern, a clear understanding of the butterfly pattern. This is about the accumulation of the knowledge. I will show you the steps that you need to follow to trade it like a pro. So this is about the classroom, all right? And then we're going to go, I will do it, I trade live, and we will trade live, we will swing trade it, and you slowly, if you are a member of, if you are a subscriber to our channel, you will notice that that's exactly what we will do, all right? So do not worry at all. So the first part of the pattern is SA, that's coming out of the channel. And then we want the price to go up in 3 moves. First move up quite deep. I'm going to explain to you the structure of the butterfly pattern. And then the second move. And then the third move up, quite up like this. Before I forget, okay, so you say to me, Joy, it's getting a little bit complicated. I don't want to watch the full length for this tutorial. All right, I'll always simplify, okay, things. That's the way my mind functions. So don't worry, I'm going to simplify it to you. So what we are talking about now is, where does the pattern form? So if I'm testing you and say, well, suppose I'm asking you, you say you are expert of butterfly pattern, and I ask you, where does the bearish butterfly pattern form? You should be able to tell me that it's formed at the end of an uptrend, all right? And you can explain to me that the first part, XA, and then we have the A, B, C, D, all right? This point here, that's what we call B for Bravo. So traders that are more experienced, stay with us, all right? Because I'm just beginning to explain, okay, or there are more I'm going to talk about how practically you deal with it. Because a lot of traders have the knowledge, but they do not have the experience and the skills. And they have been trading this pattern for years without any success. So those traders, I like them because I am the person that they need to move to the next step, all right? Okay, so point D for delta. Normally when we are talking about delta, that's how we do delta. Have you done math at school? I've done math at school, okay? In French education, we call a série C. I've done série C. Reality, that's a delta for D for delta, okay? So now, so let's be serious, okay? So we have an uptrend, price out of the uptrend. This is the red line here. And then we have A, B, C, D. All right? Now, we don't want to talk yet about the structure. So when we are talking about the structure of the butterfly pattern, that will be the next stage. The first stage, where does the pattern form? Okay? And how the pattern develop. So we see an uptrend, and then the price come out of the uptrend, and then goes up 1, 2, 3 to reach the point D. For instance, on this chart, I'm not saying that this is okay, a butterfly pattern. So price went up from A to B, uptrend, and then a pullback, SA. Remember that I'm not saying that this is a butterfly pattern. And then price goes up 1, 2, all right, 3, all right, forming, okay, the butterfly pattern. What I want you to understand, because now you can answer the question, where does the pattern form? You can answer that. You can also tell me how the pattern develop. So it will come out of the channel, and then it will go up A, B, C, D. You can see that, okay? Correct. The next thing that I want you to remember is that when we are talking about the bearish butterfly pattern, is a special double top chart pattern. So probably no one ever said that to you, and maybe because of that, you find it difficult to identify the most beautiful butterfly pattern. It's a special double top chart pattern. So I said to traders before that my favorite, okay, chart pattern, my favorite trading setup is double top and double bottom. Did I say that before? I said it, okay, 100 times. All right. So, but there are different types of double top and double bottoms. All right. So when I talked yesterday, I talked about okay, the crab pattern, the bullish crab pattern is a special double bottom chart pattern with a specific price structure with respecting specific Fibonacci ratios. All right. The same thing I'm saying to you today, the bearish butterfly pattern is a special double top chart pattern. With that information, I can see your eyes are now wide open. It's a special double top chart pattern. That's why it is formed at the end of an uptrend. But that double top, what makes it special is because the double top is not equal. So what I usually say to traders is that be careful because TSTW24, we talk about double top, double bottom. Trader very often, whenever we talk about double top, the first thing that is coming to their mind is that we have equal top. From today, forget that completely, all right? When we talk about an inverted head and shoulder chart pattern, they think that is horizontal, okay, inverted head and shoulder chart pattern. But we have other inverted head and shoulder chart pattern that we say slanted inverted head and shoulder chart pattern. So sometimes the thing is turned around, okay, it's turned from, okay, from the horizontal line a little bit. So it's not. So normally when we are talking about inverted, they are thinking of something like this, isn't it? Yeah? The head, the left hand side shoulder, and the right hand side shoulder, isn't it? Yeah? You want it to be horizontal. But sometimes it's not horizontal, it's like this. So you have the head here, and you will have, okay, the right hand side shoulder. And many times traders do not quickly identify the pattern because it's changed a little bit. Okay, the same thing when we are talking about double top, very often trader can only see a double top like this with equal top. But there are some double top, there are different type of double top, and sometimes you don't have equal top. And one of them is the butterfly pattern. The bearish butterfly pattern is a special double top with, okay, two top that are not equal. So the first top is here, and the second top is quite far away from the first top. So in order to give you a clear explanation of, or to simplify, okay, the butterfly pattern is a special double top that does not have, okay, the equal top. The second top is quite far away from the first top. So with that, you cannot forget the butterfly pattern and you will be able to identify it. So the bearish cry pattern also is a double top, a special double top that does not have, okay, equal top. All right, it makes sense. But the butterfly pattern respects, okay, or has, okay, a price structure that respects specific Fibonacci ratios. So now I'm going to talk about the anatomy. So when we are talking about the anatomy of the butterfly pattern, or if we are talking about the structure, the price structure of the butterfly pattern, don't get confused. So whenever you hear me talking about anatomy or price structure, okay, it's the same thing that I'm talking about, okay? So don't get confused. So the price structure is about how the pattern is formed exactly. Okay, the structure. So you are engineer, all right? You know that you have to respect the structure, okay? You are a builder, you have to follow the architect plan, all right? So the butterfly pattern has a specific structure, all right? So let's begin to explain the structure of the butterfly pattern. So we have an uptrend, and then we have the price coming out of the channel. Those conditions should be fulfilled before we can even start talking about the butterfly pattern. Now, the point A to point B, remember here it is It went up 1, 2, 3, yes or no? So the first part is A to B. The AB should be at 78.6% Fibonacci retracement of SA. So if you are a new trader and you never know anything about Fibonacci retracement, go to www.dayprotraders.com. All right. So here you see this is the price that came out of the channel. Now the first move up, that's what we call AB. All right. That AB should retrace up to 78% Fibonacci retracement of XA. So if I apply Fibonacci retracement to the move XA, we want the AB to be exactly at 78%, 78.6%. I do not use 78.6%. I use exactly 78%. As you can see on my chart, I have exactly 78%. And I recommend to traders to use exactly 78% instead of 78.6%. All right. So here it is 78%. We want the AB to be exactly at 78% Fibonacci retracement level of the SA. This is the first, condition for the structure of the butterfly pattern. So it's a deep retracement, all right? So it's not a shallow retracement. It's very important, all right? So talking about the anatomy of the butterfly pattern, we want a deeper retracement. The AB should be a deeper retracement. So this will also help you because when you go around, if you go around on the internet, try to read about butterfly pattern, they give you all sort of ratio and you can get confused. What I'm trying to do here is to simplify the matter simple. So when I say to you butterfly pattern, bearish butterfly pattern, first thing that should come into your mind is a special double top that does not have equal high. That should click. When I say bullish butterfly pattern, the first thing that should come into your mind is a special double bottom pattern that does not have equal low. Now, if you are talking about the anatomy of the butterfly pattern, you want to understand that the AB, we have a pattern ABCD in the butterfly pattern, but the AB should be a deep retracement in relation to SA. With that, you will be able to quickly recognize whether you are dealing with a butterfly pattern or not. It's a deeper retracement, up to 78%. We want it to be deeper, all right? Now, don't get confused. There are other patterns that have a lower retracement, like the Gartley pattern and the BAT pattern. That's how I can filter out. So when I see a lower retracement, I think of BAT and Gartley. When I see a deeper retracement, the only pattern that comes into my mind is the butterfly pattern. So the butterfly pattern is the one that have a deeper retracement to the SA. So we want it to go up to 78% Fibonacci retracement level. Now, if you go around on the internet, people will say that that pattern should be exact. These are exact, precise pattern. Now, it's up to you. When it comes to real trading, there is nothing like exact and precise. The reason why I want to clear your mind from that word exact and precise in trading is because we have distortion in the market and things are not always exact. Sometimes you will see it exactly at 78%. Sometimes you will see a long tail or a shadow piercing beyond that. So what we are doing here, this is the classroom. After the explanation, when we start doing real trading, live recording about this pattern in the near future, you will see that in real trading, things are never exact, But in theory, you will hear a lot of people say that it must be exact, So understand that. So the deeper retracement, 78%, that's the anatomy of the butterfly pattern. The B to C, this move here, should be between 38.2% and 88.6% Fibonacci retracement level of AB. So the BC is a correction of AB. All right, so you see pull back. So the AB, the BC can go down, okay, from 38.2% all the way to 88.6% Fibonacci retracement level. I would say to traders, we will prefer it not to go down too much, all right? But it can go down up to 88.6% Fibonacci retracement level of AB, because this is going to go up more. We don't want it to go down too much. A deeper retracement, we don't want it here between from BC. So in theory, the BC can retrace up between 38.2% and 88.6% Fibonacci retracement level, all right? And then the last part of the anatomy of the butterfly pattern, they see a D, which is the last part of the pattern, should go up to 127 Fibonacci extension level of XA. This is XA here. So if you apply Fibonacci extension, all right, to SA, oh, that's the other way around because it's up here. You have to do it the other way around, okay? So the point D should be between 1 to 7% Fibonacci extension level. Should go up to 1 to 7% Fibonacci extension level of SA. So this is SA, point A. We apply the Fibonacci extension, the reverse, the other way around, to the Fibonacci to the SA, and we want to highlight. Okay, I do not have 1 to 7. I'll put it on my thing. 1 to 7. I will change this one to 1 to 7. to 7% Fibonacci extension of SA. So now you can see the 1 to 7 here. So that's where we want the point D to be. But the point I want to make to you, this is about the theory. All right, this is about the theory. In practical trading, my recommendation to traders is that the butterfly pattern can stop at 1 to 7% Fibonacci extension level of the SA, but can also go all the way to 138.2% Fibonacci extension level of SA. Normally, you will notice on the internet that a lot of traders will say that it will stop exactly at 1 to 7% Fibonacci extension level. But in practical trading, I will tell you that you can expect it sometime to go up to 138.2% Fibonacci extension level of S8. Because if you go to dayprotrader.com, click on 138.2% Fibonacci extension level, and you will understand why I'm saying that you need to watch the 138.2% Fibonacci extension level of SA, because it's the most powerful Fibonacci extension level. There are videos at dayprotrader.com where I demonstrate to traders the power of 138.2% Fibonacci extension level. Now, it also brings into our mind the flat correction. Traders who understand the flat correction, the area with flat correction, 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. All right. So usually the flat correction will end at 138.2% Fibonacci extension level. Don't get confused. So we are talking about the butterfly pattern, the bearish butterfly pattern. The point D, in theory, should stop at 1 to 7% Fibonacci extension level of SA. So this is about the anatomy of the butterfly pattern, which you will hear trader talking about precise Fibonacci pattern. As I explained to you, stay away from the word precise, okay, or exact. We want to think of in real trading. Sometimes it can be precise, sometimes it may not be precise. So what usually takes place, my friend? How do we trade it? Okay, so we talk about where does the pattern form? The correct answer is that the pattern is formed, the bearish butterfly pattern is formed at the end of, okay, an uptrend. It's a special double top that does not have equal high. With that information, we are ahead of many traders already. Now, talking about the specific structure or the anatomy of the butterfly pattern, what I want you to remember is that the butterfly pattern, the AB, is a deeper retracement. I want that one to stick into your mind. It's a deeper retracement. Because if you start learning about the Gartley pattern, the bad pattern, all right, and the crab pattern, you will quickly realize that you may start getting confused and you may forget the pattern sometime. But by understanding that the butterfly pattern has a deeper retracement, this will help you quickly to know whether you are dealing with, okay, the butterfly pattern or not. So the AB has a deeper retracement in relation to SA. All right? When a pattern is being formed, the price is first in an uptrend, and then the S8 is the SA is the one that come out of the channel. All right? Uptrend, out of the channel, SA. So if you are talking about a bearish Fibonacci pattern, the SA should be bearish. All right, so remember, so if you, because sometimes traders will look at another pattern and they get confused, they say this is this pattern, but it's not. I see some videos. I don't want to criticize traders because traders do not have the same level. They are learning and they are posting video on YouTube, which is okay. So I'm not going to, okay, hammer them. All right, so when you are talking about bearish Fibonacci pattern, the SA should be bearish. When you are talking about bullish Fibonacci pattern, the SA should be bullish. All right. All right, so just those are few things that will help you quickly know whether you are getting it right or wrong. All right, so because I'm talking about bearish chart pattern, I know that the SA should be bearish. It's the one that is coming out of the bullish channel. Okay, now for the structure, the exact structure, if I say to you the AB should be 78.6% Fibonacci retracement of SA, the BC should be between 38.2% and 88.6% Fibonacci retracement of AB, and the CD should go up to 1 to 7% Fibonacci extension of SA. Now those are numbers, and sometimes they say, oh George, that's a bit too much for me. All right, so what I'm trying to do here is to help you get the message clear. It's a special double top that does not have equal high. Okay, equal top. That is helping you a bit. Now another thing you want to understand, the AB is a deeper retracement for the butterfly pattern. With those information, you will be able, okay, to quickly recognize, okay, the butterfly pattern. So when you look at a double top on your chart like this, all right, suppose you are here and you see something like this, a top and another one higher, then you go out now, you say, okay, uptrend, out of the uptrend is the SA, definitely SA. Now I want to see A, B, C, D. All right. Now you want to make sure that the AB is a deeper retracement. So is it deeper retracement to the SA? Oh, good. So you don't want to think of Gartley pattern in this case. You don't want to talk. You don't want to think of a bad pattern in this case. The first pattern that is coming to your mind is the distinctive butterfly Fibonacci pattern. All right. Am I helping you? All right, if not, put your comment in the comment section, or you have any suggestions, put in the comment section. Because when we are talking about a ratio, 78.6% of SA, okay, so that's the deeper retracement, very, very important. Remember that, at least remember 78.6%, all right, deeper retracement of SA. That's the first condition of the structure or the anatomy of the butterfly pattern. The BC, like every other Fibonacci pattern, is between 38.2% and 88.6%. Most of them, all Fibonacci pattern, the BC is between 38.2% and 88.6% Fibonacci retracement level of AB. All right, but the CD is 1 to 7% Fibonacci extension of SA. You see here, if you go on internet, they will give you different ratio in relation to other, okay, part of the pattern. I always refer the CD to the SA. To avoid too much information, all we need, always refer the CD to SA. So if you go on the internet or watching videos or reading, when they give you all sort of information, pick up the one where the CD is relating to SA. The CD should be 127% Fibonacci extension of SA. This is about the anatomy of the butterfly pattern. It's beautiful, isn't it? It's beautiful butterfly pattern. So how do we trade this? That's what we do care about, okay? This is where I come in, all right? How do we trade it? So one can know how the pattern is formed. One can clearly, okay, recall, okay, the correct, the exact structure of the butterfly pattern. One can identify the pattern. One can filter out the false butterfly pattern. But how do you trade the butterfly pattern? Okay, as I say to traders 100 times, all right, a pattern is that pattern only if the pattern is completed. So if you are new to us, don't think that, Joe, you are saying all sort of bullshit, all right? It makes sense, all right? So if the pattern, the butterfly pattern, is only a butterfly pattern at the time when the pattern is completed at point D, is not yet a butterfly pattern. If we are at point C, is not yet a butterfly pattern. When we are at point B, is not yet a butterfly pattern when we are at point A. So a pattern is only completed if the pattern, okay, is completed. A pattern is that pattern if that pattern is completed. That's what I meant. So that pattern, the butterfly pattern, the bearish butterfly pattern, we see an uptrend, we see the SA. Now the pattern is underway, A, B, C, D. The pattern is now completed here. So we see our double toe that does not have equal high. Okay, so that's the first thing that you can quickly notice. And then you're going to verify whether it's at the right place, because the pattern, when we are thinking of a pattern, we're thinking of a location. Is it at the right place? You want to trade it like an expert. So you are looking at the structure. Is AB a deeper retracement? What is the BC in relation to AB? And where is the CD in relation to SA? So everything aligned clearly. Now you say, okay, George, I can certify as an expert butterfly trader that this is a valid butterfly pattern. Now, how do you trade it? Okay, when you see the pattern now, it's a 1 to 7. So you will draw your warning line. Why? Why you need to draw a warning line? Because the price can break above that level. That's why I say to you, stay away from the word precise, because sometimes traders will say, it's there, and they sell, and they forget. And the price continue to go up. Now they are wondering and say, oh, what's happening here? Well, the price can go up and go down, all right? So nothing is exact. Nothing is set in a stone. So draw your warning line. So you will say priority to bearish signal below because a bearish pattern is completed. I want to give priority to bearish signal below the 8044, which is the end of the pattern at point D. But one more thing I want you to do, talking about practical trading, is that I want you to highlight also the 138.2% Fibonacci extension level of SA. And if you like, it's your own chart, you can also highlight 150 Fibonacci extension level of SA. Have them on your chart. So have them on your chart, all right? It doesn't mean that they probably definitely go there. Just have them on your chart, okay? 1 to 7, 138.2%, which is the most powerful Fibonacci extension level, and 150. All right, and then you say priority to bearish signal below, okay, the 1 to 7, all right. So price found a resistance here, okay, and then you see your first If you see this on the weekly chart, that's very good. On the monthly chart, that's very good. You can see even on the hourly time frame or the 4-hour time frame, but use a higher time frame first and then implement a top-down trading method. So when a pattern is completed here, do not trade it like old-fashioned traders. All right, you can quote me on that. Use multiple time frame trading method. So for instance, if you see this on the 4-hour time frame, you will combine the 4-hour time frame with the 15-minute time frame, 4-hour time frame, 15-minute time frame for the signal, and then you enter the trade either on the 3-minute time frame or the 5-minute time frame. All right, this is one example of multiple time frame trading method. The trading setup on the 4-hour time frame, the signal on the 15-minute time frame, and the entry either on the 5 or 3-minute time frame. All right. Now, if you see this on the weekly chart, the weekly chart is your trading setup. More experienced trader, as we see this, for instance, if I see this on the 4-hour time frame, I will go to the daily chart to validate the trading setup. So the trading setup, the validation of the trading setup on a higher time frame. So probably if you are new to us, it means that you have to go and watch other videos at 24 Stock Trader, okay, before coming to dayprotrader.com, because we are talking about multiple time frame trading method at 24 Stock Trader YouTube channel. All right, so the pattern is completed. It is a trading setup. It's not a signal. It's not an entry. All right, unless you have a method of trading that working for you. So some professional trade with the same stop loss all the time. So 50 pip, 50 pip. They sell, either they are taking out or not, 50 pip all over the place. But that's not what I'm saying here. Pattern is completed, you have a trading setup. Good. Now implement a top-down trading method. If you see this on the weekly chart, the weekly time frame is your trading setup, the 4-hour time frame or the 2-hour time frame for your trading signal, and the 15-minute time frame for your entry. You see this on the daily chart is your trading setup, the hourly time frame for the signal, and the 10-minute time frame for your entry. On the monthly chart, top-down trading method or multiple time frame trading method, the monthly time frame is your trading setup, the daily time frame is your signal, and the hourly time frame for your entry for position trading. All right, we can break it down even from the quarterly chart, multiple time frame trading method. From the yearly chart, you see, we're going to use a multiple time frame trading method again. This is the best way forward. So very often, when traders see the pattern like this, because the pattern is completed here exactly at 127, people sell and the price continue to go up, and another pattern is now in place. So I want to mention something else to you when we are discussing the multiple, how do we trade it? When traders are trading, okay, the professional trading, they are multi-talented traders, all right? Sometimes Fibonacci traders get into conflict with area wave traders, all right? And the area wave traders very often can punish Fibonacci traders, all right? Why? Because the area wave traders look at the price structure. All right, sometimes as the price is developing, the area wave traders are counting the waves, the internal waves. And the area wave trader and the Fibonacci trader will quickly sell straight away because the price is at a key Fibonacci level. And the area wave trader do not care about that. They care about the structure of the pattern. For instance, as I was telling you about the flat correction, 1, 2, 3, 1, 2, 3, those are internal waves. So what I want you to do, now that you know you are able to identify the butterfly pattern, how do you trade it? You draw your warning line. That's the first step. You also put your chart 138.2% and 150% level, 150% Fibonacci extension level of SA on your chart. Those are just key level, nothing special about them. All right. Now you are giving priority to bearish signal below the 127% or below 138.2% level. Prefer 138.2% myself. Now, if the setup is in place, implement a top-down trading method. This is just critical. If you are not implementing a top-down trading method, you are just hoping that the price will be nice to you. So you sell and the price is nice and it goes down. Okay, but if you are applying a top-down trading method, you are controlling your own destiny, you are handling the risk. carefully. So when a pattern is completed, what do you need to do? You put that stock on your that currency or stock on your bearish watch list. So I find a bearish butterfly pattern. Now this one will go into my bearish watch list. Okay? All right? Bearish watch list. If you are swing trader or position trader, that's what you will do. If you are day trader, you're going to trade it straight away. But when you want to trade it, please use multiple time frame trading method. So you see on the hourly time frame, don't just buy or sell on the hourly time frame straight away. Use different time frames. This is what I'm barking about. This is critical, all right? So if the signal fell, just come out, all right? Don't fight the price, okay? So we're talking about the trading setup time frame, the signal time frame. If the signal change from bearish to bullish, don't fight it. Just come out again. There will be another chance. All right. Another thing I want to clarify to trader, as we are talking about Fibonacci, okay, bearish butterfly pattern, is that sometimes you will see that the pattern is completed here, and we highlight 138.2%, 150. But sometimes you may have a major resistance level above all these levels. All right, let me adjust my line. Suppose, for instance, the line that I'm going to call out here is just a major resistance level that has nothing to do with Fibonacci key level. So instead of waiting, the smart money will prefer to sell at a major resistance level, at the best resistance level. But ordinary traders that are trading the pattern alone will just sell because the pattern is completed. Yes, the pattern is completed. But the smart money say, yes, the pattern is completed. We know. But we don't want to sell at that price. We want to sell at 8073 because the smart money will always buy or sell at a specific price level. The reason why I'm saying this to you is because when you start trading this pattern, you will see sometimes that, oh, George, no, it's not working. The reason sometimes that it does not work is because the price will continue to go up for a while to reach a better resistance level. So be aware of those levels. So in order to avoid those tricky conditions, tricky trading environment, have on your chart 127, 150, okay, 138.2% and 150%, and keep your eyes wide open and ask the question, is there a better resistance ahead? If there is a better resistance ahead, the smart money is watching it. And sometimes they will force the price up to that specific price level where they will sell. But you will be able to handle the risk carefully if you are applying a top-down trading method. So if the price is going to go down, you go down in a declining channel. It makes sense? It is also powerful. So the pattern, the bearish butterfly pattern, is a bearish trading setup. It is essential that day traders, swing traders, position traders, okay, use a top-down trading method to trade it. You'll also notice that most technical indicators will become overbought, or you may see a divergence, a bearish divergence, when during the price move from C, okay, to D. You want at least the common set trend line along the CD to be broken. Boom, down, okay? And then you implement your top-down trading method to trade it. All right? So to summarize this tutorial about clear explanation of the bearish Fibonacci butterfly pattern is a special double top that does not have equal top. It has a specific price structure. The AB should be a deeper retracement of SA up to 78.6% Fibonacci retracement level of SA. The BC retracement should be between 38.2% and 88.6% Fibonacci retracement level of AB. But the C to D can go up to 1 to 7% Fibonacci extension of SA. I always refer the CD to SA. All right? The bearish butterfly pattern will be formed at the end of an uptrend. It's a bearish chart pattern. So we want to see first a bullish progression. And then the price is out of the bearish progression, okay? And then we want to see A, B, C, D with a specific, okay, Fibonacci ratio. When the pattern is completed, we have, okay, a trading setup. We must now implement a top-down trading method to trade it. Another thing I want to say to you, though we can trade a pattern when it is completed, more experienced trader can trade the pattern as the pattern is developing. What do I mean? So the pattern is developing. We see A, B. All right, so now you see that the A, B is a deeper retracement, and now the price pull back to 38.2% or 61.8% or 88.6% Fibonacci retracement level of AB. So you see now it pull back like this. So the price here at that point in time, and you see it start changing direction. So you say, well, this looks like a bearish butterfly developing. All right, so you can forecast that the price move from here can go up to 127, yes or no? So we can trade the pattern as the pattern is developing. And one of the places where we can enter the trades is point C. So you see here, it come out of it. It went up to 78.6% Fibonacci retracement level of S8. And then you say, well, are we going to have a bearish butterfly pattern? Let's see. Here it is a pullback to 38.2% or 61.8%. And then start changing direction. You say, well, it looks to me that this thing can go up to 127. But it does not have to. The price can stop here or it can stop at this high here. But then as a swing trader, you can trade it bit by bit. So you buy here at point C as the pattern is developing using a top-down trading method. You grab your profit as the point as the price reaches point B. So you bought it here. You secure your gain at point B or you cash out. You allow it to break above point B to retest it. Now you re-enter again using a top-down trading method. Price start going up. It reaches the point X. You secure your gain, or you take your profit altogether. Price breaks above, okay, X, retest it. Now you buy again, and you bring it to the 127% Fibonacci extension level. So we can trade a pattern as the pattern is being formed, but the pattern will only be completed when we reach the point D for delta at 127% Fibonacci extension level. Another thing that I want you to remember is that you will notice that on the internet, trader will talk about precise, okay, harmonic pattern, precise Fibonacci pattern. I don't want you to use the word precise. I don't want you to use the word exact, because when it comes to real trading, the pattern can extend and people will be saying, where is it going to stop? All I want you to do, remember that the common central line should be broken before we can even thinking of selling it. Price can continue to go up. So when you draw your warning line and it breaks above it, retest a final support, well, if you want to buy, hey, use a top-down trading method to buy. If you don't want to buy, wait patiently until it comes back down below the 127. Sometimes you see the price will go up like this and then will turn around and come back down. In all cases, use a multiple time frame trading method to trade it. The butterfly pattern is a Fibonacci pattern with a specific Fibonacci ratio. AB should be at 78.6% Fibonacci retracement level of SA. Just remember that AB should be a deeper retracement of SA. Very, very important for the butterfly pattern, okay? The BC between 38.2% and 88.6%. Okay, so it can be any, just think of it, BC can be AD, okay, retracement, all the way to 88.6% level, all right? And most importantly, the C to D in relation to SA should go up to 127%, sometimes even to 138.2%, or push it to 150. But in theory, remember 127% Fibonacci, okay, extension level. It makes sense? It is also powerful. So if this is the first time that you know about the butterfly pattern, the most important is that where does the pattern form? It forms at the end of an uptrend. Very, very important. Do not go around calling other pattern that has similar structure, okay, bearish butterfly pattern. Is it at the end of an uptrend? If it's not, it is not a bearish butterfly pattern, full stop. It doesn't matter whether we have a deeper retracement ABCD. You want to see an uptrend, and then here it is. You will make better decision if you are checking the structure. Where does the pattern form? Where does the pattern form? And then you verify the structure of the pattern like an expert. The first verification is the AB. Is it a deeper retracement? We want it to go up deeper into the SA 78.6% Fibonacci retracement level. The BC can be any retracement up to 88.6% level. Remember that the butterfly, the bearish butterfly pattern, is a special double top. So it will click quickly. So you will see a double top that does not have equal top. So you will now go around and check the structure and the place where the pattern is formed. Because sometimes traders do not quickly see the pattern. So myself, what I'm usually doing, I'm clicking on my chart like this. I can just go around clicking, and if I see any, you see now I have here a top, and you see here I'm on the 4-hour time frame of the Euro GBP. Now you can see that this top is going a little bit above it, the previous top. So now I can say very fast, if I see it goes up more, like this, and then start changing direction, what's going to go to my mind? Because I know it's a double top that does not have equal top. Now I proceed into the verification of the pattern. Is he at the right place? Do we have an uptrend first? Where is the SA? Do we have the same structure? Now I see this on the 4-hour time frame. I'm an experienced trader. I will not stop on the 4-hour time frame. I want to validate my trading setup. So I can go to the daily chart, weekly chart, monthly chart to see the bigger picture. I will do that. Some traders, if you are new, well, all right. If you are new, play around, first, and then see what's going on, And then from there, when the pattern is completed, I will not just rush and sell it, Draw your warning line and implement a top-down trading method like a pro, consistently. What you are looking for, you don't just want to get excited, all right, and sell, and then the price continue to go up, You want to get it right. That's what you care about. You want to get it right, consistently. So like I show you now, you see now, so when we are going through the chart like this, we can quickly see whether we have it here, you have one, you see here, a top, and with another top higher, Now you look back and check, is there a butterfly pattern, So this is what we call SA. So the first verification, this is the SA, well, it's the AB, and then you go around and check it, the structure of the pattern, to validate whether it's a valid bearish butterfly pattern or an invalid bearish butterfly pattern. All right. So if you have any question or suggestion, put in the comment section, and in due course, I will be recording another video, to answer your specific question. We are the TSTW 24 traders talking about clear explanation of the bearish Fibonacci butterfly pattern. Happy trading to you all, and speak to you soon. By the way, I want to thank traders for their interaction at Day Pro Traders. That's very good. Keep it up, all right? I like that. So I don't feel like I'm the only one here, so I would like to thank you today for your interactions, at Day Pro Traders, YouTube channel. Happy trading to you all, and speak to you soon.